Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton. Every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Coming up, on the eve of the Victorian state election, former Premier John Brumby joins us to talk state politics, the economic agenda, and as the chair of the Australia-China Business Council, how he sees Australia-China relations at the moment. The Royal Commission wraps up with the first week back, with further grilling of the watchdog, ASIC Chief James Shipton in the stand. All the analysis with Chief Business Reporter Leo Shanahan. And in a week where Australia hosted the first ever visit from an Indian president, we talked to the Indian alternative medicine doctor who has made Bangalore the world's home of alternative medicine with a retreat that is a favourite of royalty and political leaders, Dr Issac Mathai. Well, yes, ASIC Chairman James Shipton found himself at the receiving end of a bruising session giving evidence to the Banking and Financial Services Royal Commission, forced to answer questions of the corporate regulator, the corporate regulator's cosy relationship with the banks. For more, Your Money's Chief Business Reporter Leo Shanahan joins me live at the desk. Yes, a grilling he got.
Yeah, it was a tough day for James Shipton.
Tough day for you too, I saw you out there in the wind chasing him down.
Yeah, look, only in terms of time spent in the witness box, and I think intensity of detail and, frankly, almost aggression. I think only Matt Common, well, from Ms. Orr, yeah. I think only Matt Common rivaled that. It was tough because I think James Shipton has two problems as ASIC chair. One is that as regulatory failures go, ASIC is theoretically responsible for a lot of them, while banks only really have to be responsible for their own. So there was a series of things that he had to answer questions about from CBA, NAB, etc. The other major problem is, unlike Matt Common, he can't say, well, I just got here, the others were really the problem.
He can't, well, he has just got here, really.
Yeah, I mean, he hasn't been in the job too long, only since about February this year. But
Greg Medcraft had the majority of all the indiscretions that happened were probably when Greg Medcraft was.
They were, and they were the majority of the indiscretions that he was questioned about today. Greg Medcraft was in charge, but his problem is he's still got that team. You know, very senior people are still in charge in the main, including prosecutors and different other people in the ASIC team, and he needs to defend their record as well as moving forward. So he can't really just say, oh, well, it was in the past, these guys were no good, we're moving on.
So give me some specifics, because Head of Markets Kathy Armour
well, Kathy Armour, good example, came under the spotlight basically for what transpired was in 2016, NAB came under fire for some problems within the FX trading division. There was some dodginess going on. They eventually paid a $2.5 million payment out of that. It wasn't actually a fine. But during this process, an email was unearthed where Kathy Armour basically said to a senior executive at NAB who was negotiating it, well, look, you guys, if you want to move early on a settlement, move now, because if this goes any further, we might take it to court, and I basically can lose control of the process there.
So has that been seen about being too sort of friendly in terms of offering banks?
Exactly, and it's really the question of, is this coaching the bank? Is this helping the bank, advising them? Well, it went into media as well, but look, let's have a look at this exchange with Kathy Armour, with James Shipton over the Kathy Armour email.
I want to direct you to some other parts of the email, Mr Shipton, and ask you to consider whether the problem here is a lack of professionalism or whether there are different problems that appear from this email, because Ms Armour goes on to say, my response to David was that the proposal and its nature was a matter for NAB, but I thought we would be willing to consider a proposal along those lines depending on its content. I did say to him that given the relatively early stage of the investigation, we would be willing to consider a proposal that did not involve a court outcome, if it otherwise met our key regulatory outcomes. I did urge him, though, to put a proposal to us shortly. I explained that the longer investigations go, the more prospect of us developing case theories more definitely, and there can be a risk of there being entrenched positions which would limit our flexibility on outcomes. Now, can I ask you to reflect on whether anything about that response by Ms Armour, a Commissioner of ASIC, to Mr Gall, is problematic beyond a lack of professionalism.
I just want to be absolutely clear that I firmly believe in Miss Armour's professionalism at all times, and that shouldn't be in any doubt in this case study.
Ask a question, Mr. Shipton, be good enough to answer it.
So the central problem here is the relationship that the regulator has with the banks. And I don't think anyone's saying there shouldn't be any level of consultancy with ongoing, legislation. And but where do you?
They have got a budget, Issac. They've got to pick their winners.
Exactly. And the point actually he made as well is that during this time you had the BBSW case going on, and they was basically saying, look, you got to pick your battles, and we picked a big one with BBSW. Is this FX case worth it?
So briefly, anything else that came
Well,
up?
also on this same issue, we moved into the CBA. There was a discussion about whether the CBA should have been consulted on a media release. I mean, the CBA was brought in prior to the CommonSure payment they made, which is $300,000, and admitting fault over that, misleading advertising, etc. They were basically consulted on how to draw up the media release. Now, if you have a listen to this interchange, because he basically said this was the wrong thing to do at the time, but they still do it to an extent.
That was inappropriate. That was wrong. That should not have happened, and again, we now have processes and procedures that won't happen again.
You tell us in your statement that ASIC generally communicates with the affected party its intention to issue a media release in relation to the outcome of an investigation before issuing the release.
Correct.
Why do you do that?
We do that now because we want to ensure that anything in the media release is factually correct. Please do not conflate the case study that you've just referred to with current practice. Current practice is very different, radically different to that unfortunate case study.
Well, thus ends the week's hearing in Sydney, round 7, the last round of hearings. Melbourne, we get the last week of the Royal Commission, and we'll hear from NAB's Chief Executive, as well as the Chair, as well as ANZ's Chief Executive, as well as AMP's Chief Executive. Yeah,
we're going to be absolutely exhausted by the end of this week. Leah Shanahan, thank you very much.
Thanks.
Well, a big weekend this weekend. The Victorian Premier, Daniel Andrews, has spent the morning in Melbourne in southeastern suburbs trying to shore up support in key battleground electorates ahead of tomorrow's state election. He's promising free breakfasts and lunches for students attending 1,000 schools across the state. Well, live to Sky News Melbourne Bureau Chief Aaron Young, who's still hanging in there. Our last pitch to parents, Aaron.
Yes, very much so. The kids can't vote, but the parents certainly can, so let's make life easier, of course, for the parents, and perhaps a little bit cheaper too. But this really is actually meant to be to try and help children in low socio-economic areas. So they're saying that about 10% of the children who currently participate in these free breakfast clubs and lunches actually aren't coming to school with any lunch at all. They're even going so far as to give these kids backpacks, so when they head home on the school holidays, they'll actually have things in the backpack, food that will last that 2 weeks. So they're talking about this as a last-ditch bid, of course, to try and get those parents over the line. In some of these key marginal seats, we're out in Cranbourne today, has a margin of about 2.3%. On top of that, the local member there is retiring. She's been there since 2002. The Liberals very much hoping they'll be able to get a stranglehold on Cranbourne, and do they need it? Tomorrow night they need 8 seats to win the election and essentially to put Daniel Andrews in the dustbin of a one-term government. That does seem unlikely. Today 2 polls came out. The first one was the Herald Sun Galaxy poll. That one had 53 to 47, was worse in the Fairfax Ipsos poll, which was 54 to 46. So it doesn't look to be going the way, of course, that the opposition would like it to go. The Premier happy though, but despite those polls, he says he will continue for a full term for 4 years, though we'll wait to see the outcome of the Rorts investigation, the Red Shirts Rorts. Then there's this issue of debt we spoke with you about yesterday, Ticky.
Indeed.
6% to 12% of gross state product. The Premier asked about that today because, of course, 1 million people had already voted before that bombshell was dropped. This was the response from the Premier, Ticky.
Our debt is roughly equivalent to 1 year's income. Most Victorians, I think, would be pleased to have a mortgage that was no bigger than 1 year's income. We are borrowing to build for the future.
So, Ticky, as you see there, the Premier trying to explain exactly why it was important to do so, saying it's all about infrastructure and the state can afford it, but what happens to our children and grandchildren?
OK. And when do we think we're going to get a real sense of how the election has actually gone? Because, of course, a lot of people have voted already, but when tomorrow will we get a sense?
Yeah, it's a good question. I would say probably pretty early on we'll start to see whether this is going to be a tight one or one where Labor is very much in front. If you asked me 2 weeks ago, I would have suggested that Labor actually would have increased its lead. 2 weeks ago is when pre-polling began, essentially the Monday after the Friday terror attack in Burke Street. 70,000 people went and voted on the Monday. Certainly there has been a feeling that in many of these marginal seats, the ones that aren't with a huge Labor majority, that perhaps things might be a little bit tighter than the polls that we have seen today. These polls will help Labor in seats they already have. What about the marginals? So we'll get an idea whether Labor has it in the bag, increases its majority of number of seats, or whether, of course, the Liberals will be able to pick it up, make it tight. The other factor here is the Greens. They're really trying to make a go of it in some of these inner city seats. They believe they'll be able to get Brunswick, Northcote as well. The hope for them is that they'll be able to make a difference, but they have had a shocker of a campaign almost every single day. There's been another drama involving a Greens candidate, so we'll see whether that has any impact. Back in 1999, the Greens had 1% of the vote. They're up to about 11% of the vote according to the latest polls. So they will be hoping for some sort of good result to maintain their 3 seats they have at the moment. Can they increase it? Who knows?
All right, very important election. Go well over the weekend. And Aaron Young, thank you so much for giving us all that info. And for an expert political perspective on this election, I was joined just earlier this afternoon by former Premier and now Chair of the Australia-China Business Council, John Brumby. John Brumby, great to catch you there on the eve of another state election. The numbers are looking pretty good for a return of the Andrews government.
Well, I think it's been a strong government. There's a strong economy down here in Victoria. Unemployment below 5%, so there's a positive feel about the state, and I must say that the Premier and his team have campaigned very strongly over the last 3 or 4 months. The polls were very close 3 or 4 months ago. The latest polls show a swing to Labor, so I expect that there will be a swing to Labor. I think it'll be a bit more modest than what the polls are showing. And I think it'll be quite uneven and quite patchy, so there'll be plenty of interest, I think, in a range of seats tomorrow and tomorrow night, and they'll include some of the regional seats like Ripon, some of the inner suburban seats like Melbourne and Richmond and Brunswick, and perhaps some of the independent seats like Latrobe Valley. So I expect there'll be a modest swing to Labor. They've performed strongly. The Premier's performed strongly. Yep. As I've said, the economy's strong. Now, big commitments in health and transport, but there'll be plenty of patchiness, I think, in the results.
Well, a huge commitment, interestingly, and very recently, in the last day, in infrastructure. This enormous $25.6 billion spend and raising of debt, doubling the state domestic product. Now, this, of course, was all announced after quite a lot of people have voted in Victoria. Is this a good move?
Well, so with those projects, so I think they're talking about the outer suburban rail line and the northeast link. Those projects were announced much earlier in the campaign. What occurred yesterday is the release of the final costings by the Labor Party, which were ticked off by Treasury, and they show the commitments over the next 4 years in terms of the budget capital work spend. So there's nothing new about the projects. It's not as if they've been hidden till the end.
But the decision is to borrow.
What was announced yesterday was the actual contribution over the next 4 years. Ticky, what that'll do, I mean, Victoria's been in a very strong financial position. You know, it goes back to prudent policies of previous governments. And so even with this $25 billion worth of spend, the state's net debt is still at just 12% of GDP. And that's a long way short, for example, of what national net debt is as a percentage of GDP, or US net debt as a percentage of GDP, or United Kingdom debt as a share of GDP. So it is an increase, but I think if you ask the voters, do they want less congestion and more new hospitals and more investment in public transport, the answer to that, they'd say, is yes. Providing debts at a modest and responsible and AAA level, and I'm certainly comfortable as a former Treasurer that it is at a comfortable AAA level.
All right, fair enough. Now, let me ask you some questions with your Chair of the Australia-China Business Council on that hat on. Firstly, how do you see the current Australia-China relations at the moment?
Well, I think the government-to-government relations are improved in terms of where they were. I think we've been through a period of something like 18 months. During that period, the relationship hit literally rock bottom. It started to improve with Malcolm Turnbull's speech to the University of New South Wales a couple of months ago. It seems longer now, but it was just a couple of months ago. We had the visit of the Trade Minister, Simon Birmingham, to China recently. We had the visit of the Foreign Affairs Minister, Maurice Payne, just a couple of weeks ago. I think all of those things have helped rebuild the relationship to quote, a respectful level.
We've also had some more... Yes, we're going to say we still had growing more tensions now, if you will, in the South Pacific. We've had this recent announcement by Scott Morrison to set up $1 billion infrastructure bank to fund telecommunications, energy, some sort of water projects. How do you think the Chinese will react to that?
Well, I don't think they'll be uncomfortable with that. I mean, the reality is China's been doing a lot more in the region in terms of supporting the Pacific Islands in particular, because the reality is that Australia's been doing a lot less over the last decade. I mean,
well, the suggestion is that's an influence thing.
Well, no, I don't want to make a political point, but the reality is the Australian government, since Tony Abbott, has been cutting aid significantly, massively, and that's been felt in those Pacific Islands. And the government also, you know, has been a bit each way on the issue of climate change, which is the #1 issue for those Pacific Islands. So, not surprisingly, they've formed closer alignments and relationships with China, and China's been prepared to invest in the area. So from my perspective, just as an Australian citizen standing back and looking at our neighbours, I think it's a good thing that there's more investment in the region, more investment by Australia, more investment by China, more investment by anybody who wants to invest in this region, because there's lots of people live in great poverty in these countries, and more investment will lift people out of poverty.
The Victorian government recently decided to go it alone and announce that it would join up to China's Belt and Road Initiative. Now, that has put our government offside. I think it actually put quite a few people in federal Labor offside, that our position as a nation was that we weren't going to be part of this. How sensible is it for a state to become slightly recalcitrant on this message?
Well, I wouldn't put it that way. I mean, there have been a series of speeches at federal government level over the last year which have moved Australia closer to accommodating the Belt and Road Initiative. The first of those was former Trade Minister Steve Ciobo in Shanghai in May, when he read a prepared speech, I was there, which moved Australia closer. Since then, both Malcolm Turnbull and Marissa Payne and Simon Birmingham, all of those have also moved Australia closer.
But shouldn't this have been a federal move rather than Victoria going it alone?
Yeah, no, but I'm just saying at a federal level, while the government is not signed on carte blanche to Belt and Road Initiative, they have moved closer to accommodating it. I think that's a true statement of fact. And in Victoria, what the government did was sign a memorandum of understanding. So again, it's not a carte blanche, but it says from a Victorian perspective that we support the Belt and Road Initiative, and that we welcome the opportunity to work on projects in the regions. And Ticky, from the Australia-China Business Council perspective, where our interest is about business and business opportunities, we've been strong supporters of Belt and Road because we see that it will lead to hundreds of billions of dollars worth of investment in improved transport and logistics infrastructure and health and education infrastructure in our region.
But politically, is it actually going to move forward at all? I mean, in real terms, Victoria first, or is this just an MOU that will sit there until the whole nation gets ready to do something?
Well, it's an MOU. It's one of many that the state signs, and indeed the Commonwealth earlier this year. Again, Minister Chobo, when he was Minister for Trade, signed an MOU with the Chinese government on third-party projects, which many people would read to understand it means Belt and Road projects. So I think there's been a closer movement here, but again, from the Australia-China Business Council point of view, we think it's a good thing for the region. We think it's a good thing in terms of Australian companies getting opportunities to work on projects. We'll leave the diplomacy and the security issues to the Australian government, right. but it is a bit like the Asian Infrastructure and Investment Bank, which the Australian government, Minister Hockey, did sign up to that. If you're in these things early, you have a bigger say in terms of the projects and the direction and the financing and the governance arrangement. So again, it's why we've supported this at ACBC level, because we see it as a huge economic boost for the region. All
right, can I finish by asking you about Huawei? Now, you've obviously been on the board for several years now. Just earlier this month, the Australian broke a story that suggested that, well, the first instance of Huawei being actually used by the Chinese government as a conduit for intelligence gathering. You know, the security source talked about an unnamed high-risk vendor confirmed by the Australian to be Huawei. Now, Huawei has, of course, been banned from 5G. Does this not support that government decision?
Well, that particular story, Huawei has responded to on a number of occasions, and it's actually not a new story. It goes back to an alleged matter in Africa many years ago.
That's one and the same story, is it?
It's the same story. And the company has always stridently rejected that, vehemently rejected that, and said that there is no basis to it. And I obviously support that position. But can I say just more generally, Huawei is building 5G networks all around the world. I had a meeting this morning with a medical group from New Zealand who just laughed at this issue and said, gee, it's not an issue for us in New Zealand. We like Huawei. The government is using them. The telecommunications agency is...
Key to this in New Zealand is this, these trials that have been done on core and edge. And it would seem that if you can actually demonstrate that core and edge in terms of your technology could be separated, perhaps that is an opportunity for Huawei. Is that what you're thinking?
Well, that's exactly what's happening there. And indeed, I was just updated this morning with my morning news summaries, but we've just signed 22 agreements in Europe on 5G, and in all of those cases there's no security issue which can't be managed. So I don't want to get into a political debate. I'm not a political commentator, but I just make the point that everywhere else around the world, with the exception of Australia and the United States, we're busy building 5G networks, and there are no security issues that can't be managed in the same way as they're managed with any other firm. And I think most commentators, Ticky, would acknowledge that we are the only end-to-end provider in terms of 5G, and that our kit is the best in the world and also the most cost-effective in the world. But the Australian government, we respect their decision. They're entitled to make that decision, and we'll work within the confines of that. But there are only 2 countries in the world where we're not able to build 5G.
John Brumby, it is always great to talk to you. Thank you very much. We'll follow this weekend with interest.
We will. Thanks, Ticky.
After the break, a watershed weekend coming up for Brexit. We'll get the details from CEO of the Australian British Chamber of Commerce, David McCredie.
You're watching Ticky on Your Money.
Yes, welcome back. Well, stocks in Asia mostly slipped today as investors remain wary about uncertainties surrounding the British divorce negotiations with the European Union. More of that shortly. This, too, as tensions between the United States and China grow ahead of next week's G20 summit in BA in South America. For more on what's been happening in Asian markets, Fidelity International's Director Catherine Yung joins me live from Hong Kong. Catherine, I don't think this is Catherine. No, I think we're actually talking to Craig Lazzara.
But regardless, you don't need to show the visa people that.
Talking to Craig Lazzara, Managing Director, Global Head of Index Investment Strategy at S&P Dow Jones Indices. Craig, nice to have you on board. Now, look, the market, as I was saying, has come off quite a lot. What should investors expect from the market, do you think?
I think volatility will continue to be elevated relative to where it was earlier this year. But when you look at the history of volatility in the market, what you see is not that we're at extraordinary levels today. I mean, it's a bit above average, but it's been so extraordinarily low for so long that it feels much worse than in fact it really is.
Right, okay. So what is the way that investors should be looking at this now, and particularly in regard to opportunities perhaps in terms of value investing, active investing, to see it as an opportunity to buy in, given there's been some correction?
Well, the argument I would make to investors, Ticky, is that the base of their portfolio ought to be a passively managed fund, for example, against the ASX 200 for Australian investors, S&P 500 for US, and so forth. One of the things that most investors perhaps don't realize is that on average, most active managers underperform unmanaged indices most of the time. So not only
you've got to get the right active investor, I suppose.
Yeah, not to say there are always exceptions, but the reason we know their names is because they're exceptional.
Yes.
And what you find is, if you look at the data, that most active managers, as I say, underperform most of the time.
Oh, the data over what period?
Well, we have a particular study that goes back to 2001 in the U.S.
Yeah.
There are studies from the 70s that are really quite famous that have been published.
Right, I was going to say, more recent times, you'd think Blind Freddie could be sitting there and everything going up, so active investors outperforming ETFs might be harder, but this is consistent over time.
No, it's quite consistent. The earliest data I know of come from 1932.
Okay.
And now that's a little bit more primitive than the studies would be today, but nonetheless the conclusion was the same. And the reason for that, Ticky, is that if you think about the way markets work, if all of us in this room are investors in a particular market, if I'm going to be above average, somebody else has to be below average.
Well, that's right. Yeah. So what do you say to the people who argue that ETFs and baskets of index funds actually contribute to the falling markets?
I don't think that's correct. I mean, there's a confusion sometimes of to be philosophical, proximate cause and ultimate cause. Now, what happens is if investors want to reduce their equity exposure, they sell equity. Sometimes they sell passive equity, sometimes they sell active equity. But the cause of the market's decline is people lightening their equity positions. If there were no ETFs or index funds, people would still want to lighten their equity positions.
Yes.
But the impact would actually be much worse because...
Oh, so ETFs don't...
Oh, I think they diminish it because if you sell actively managed portfolios, they typically are less diversified. And so the selling activity is more concentrated. And I think back to 1987, for example, when there were no ETFs, index funds were negligible, and we had quite a volatile market in October of '87, as you may recall, without... all done by active managers. So indices.
And this idea that you can actually you can grow the ETF market so much that there's really nothing left, and there's nothing underneath them, really. You've just got the baskets of currencies. Isn't that self-defeating?
If you got to that point, but our estimate is for the U.S., which is probably the most developed in terms of indexation, maybe 20 to 25% of all assets are in passive form, and you could easily get to 70 or 80% before trading activity were dominated by passive managers. So there's a very long road ahead.
Right, okay. Some defensive stocks you're looking at as well.
Well, we don't recommend stock recommend, but what I would argue is that there's a family of low volatility indices: ASX 200 low volatility, S&P 500 low volatility. These indices, or these stocks rather, are selected because they're less volatile, and therefore they tend to do worse than the market if the market's going up, better if the market's going down, so we refer to them as protection in down markets, participation in up markets. And that pattern of returns is very congenial to a lot of investors, especially now. Low volatility, we published on this just recently, was the ugly duckling of the U.S. market for the first 9 months of the year, and in October has come roaring back and is now one of the best factors that we look at on an ongoing basis. So investors who are worried about volatility or feel cautious about the market should really consider low vol strategies as a way to have equity exposure, yes, but not be too terribly exposed if they're wrong.
All right. Well, Craig Lazzara, it's very interesting. Nice to hear a little bit about the index fund side of things. Nice to have you over. Okay, well, stocks in Asia, as I was saying earlier, stocks in Asia mostly slipped today as investors remain wary about uncertainty surrounding Britain's divorce negotiations with the EU. This too as tensions between the US and China grow ahead of next week's G20 summit in Buenos Aires. Well, for more on what's been happening in Asian markets this week, Fidelity International's investment director, Catherine Yeung, she joins me live from Hong Kong. Catherine, obviously a lot of expectation around the G20 meeting. How is Hong Kong, China seeing it?
Well, it's very sort of bipolar. One minute the markets are applauding any potential outcome. The next minute they seem to be down and out, that there isn't going to be a resolution. So the markets are definitely still very much focusing on what could occur in terms of the outcome of the trade issue. Right.
Okay. So we're not, I mean, are they hopeful, glass half full? What is this about Peter Navarro, who is the quite sort of hawkish US Director of Trade and Industry Policy? He looks like he won't be too much of a part of things. Is that reason for optimism? Oh, well, I think we might have
lost
Catherine. Oh, here she is. Yes, Catherine, can you hear me?
Yes, I can. There are so many expectations on both sides. I mean, when we look at some of the low hurdles, they're achievable in terms of intellectual property. In terms of the higher hurdles, it's this ongoing focus that the US has on the Chinese companies in terms of the Make in China 2025 strategy, i.e. Chinese companies becoming a lot more innovative and climbing up the value chain when we talk from a manufacturing perspective. It's interesting though, Ticky, they're on the ground in China. The corporates are sort of looking at this. You aren't seeing them reinvest, though, on the back of this only. There's a lot more concern in terms of the deleveraging process that we're seeing in China, and that's sort of a universal comment in terms of concerns about reinvesting into their business.
Okay. Some interesting developments on the regulation front, and that's sort of leading to trading halts.
Yes, so if we look back to the last big share market fall in China, it was one point or several trading sessions where there was barely anything that you could trade, so companies would just go into suspension. So the regulator is now looking at putting a time frame in terms of 10 days, or suggesting that it's a 10-day limit for companies to say, I'm restructuring, therefore I'm not trading, or my shares aren't open for trading. They're now saying that companies are using this in periods of volatility so their share prices don't drop. So they're really looking to improve the regulatory environment, and we're seeing all these kind of regulatory changes as a way for the Chinese to open up their capital markets properly.
Right, and in the meantime, the overall sense of things, accommodation policy bias is all still in place, is it?
They are indeed, and the real risk is that the Chinese government, in fact, overstimulates during this quarter at a time when, in fact, the US could potentially over-tighten. So both dynamics, both at different ends of the spectrum.
Right. Catherine Yeung, great to talk. Thanks so much. Going back to Brexit now, and for more detail on the deal struck overnight, I spoke with the Chief Executive of the Australian British Chamber of Commerce, David McCredie. David McCredie, great to catch you there. Now, do we think Theresa May is in a more or less precarious position than when we spoke earlier in the week?
Well, I think probably less, Ticky, and that's because on the domestic front, things are settling down with Jacob Rees-Mogg not getting his 48 letters into the 1922 committee that he seemed so certain of only a few days earlier. And people are looking at the deal and starting to be a bit more pragmatic about it rather than the visceral and gut response, I guess, of the first 24 or 48 hours. I think also we're starting to see a little bit of fracturing on the EU side of the equation. Barnier until now has done a great job of holding the the team together, all 27 countries. And now we're hearing, the Spanish are unhappy about Gibraltar. There are some concerns from the French and the Dutch around fishing rights. So it's starting to feel like there's a little bit of unease on the continent, or within the other 27. So the leaders' meeting this weekend will really be where we'll find out what will happen.
So, I remind everybody that when William Hague was out here, a month or so ago, he gave the chances of a Brexit deal going through all the hoops that were required. In other words, this deal that Theresa May has got to be negotiated and then signed off by Europe and then through the British Parliament at about 50%. We're now at the EU agreement side, and this is the 11th hour, isn't it, for them?
Well, absolutely. This is what they're going to go forward with. So if they have changes, if they have issues, they have to raise them now. And I think it's been made clear that there are some issues on the UK side as well. But we all know that in the past, when EU leaders have gathered together, that's when the actual decisions have been made. As much as negotiators can negotiate, it's when the ministers or the prime ministers and presidents, the heads of state of those 27 countries, when they come together with Theresa May, and they will nut out the final deal. That is the way it will work. It's always likely to have gone that way. We've got very close to the deal, obviously, where we're at now. It is only draft text. In 48 hours from now, it will be a permanent text. It will be the text that will be taken forward to the UK Parliament. And I'm sure there'll be a little bit of last-minute horse trading. OK, so those two areas that you mentioned. Now, one, it would look like Britain would not move, which is on Gibraltar. Actually, they were great Remainers, weren't they, in terms of a poll done in terms of how they voted in the referendum. But Spain, even before the referendum, was kind of pulling a Swiftie and saying, right, well, if you guys leave Europe, then we're going to take back Gibraltar. Presumably that is an absolute no-no for those living on Gibraltar and Britain. Absolutely, and in the draft text it's recognised that it will continue to be a British territory. So I don't think that that's something that's likely to change. I think the Spanish have obviously got their view, and there's some historical baggage that goes along with that. But I think there's some more concerns that are sort of trickling out about it, which is about some of the tax pieces and other issues around the relationship between Gibraltar and the rest of Spain that they're interested in looking at, which haven't probably been addressed in significant detail in the withdrawal agreement. OK, so what about the other big issue, which is over fishing rights as we go forward? Now, I see the French in particular and the Dutch, they do want rights in British waters, is that right? And what are the chances of Mrs May giving them a little bit, which would no doubt make certain sectors in Britain quite cross? Look, I think, to be honest, it's probably unlikely. I think whereas the UK has been conceding quite a lot along this journey, I think the ability for the UK to pressure the EU at this point in time, given that they've done their end of the bargain to this point, the Cabinet has approved it, it's up to the EU 27 leaders to approve on the other end before it then goes to each Parliament. The UK are in a strong position here to say, well, this is what we've agreed. And keep in mind that all of this is only on the withdrawal agreement. The opportunity for something different to occur when we talk about the future trading arrangements is another thing altogether. And keeping in mind that if you have a deal, then the future arrangements hopefully will come into play before the end of the transition period, which will be in place because the deal has been done. OK, well that's obviously what the Prime Minister is hoping, and that the Irish backstop won't be required. How does this look, presuming you get approval on the EU side? How does this look in terms of British parliamentary approval, given that, I mean, even I see the CBI group of business leaders who publicly supported Theresa May, emails accidentally sent to ITV News that it wasn't a good deal, Theresa May's deal? Look, I think the reality is, as people who have been through a divorce probably know, when you wind up at the end of the arrangement, a good divorce is where both sides are a little bit unhappy. And I think that's going to be the reality. There's no win-win situation out of this where everybody comes away feeling like they've got a great deal and they feel well rewarded for their negotiation. I don't think that's a likely outcome.
But you do
I think
see,
a much
you
more
do see
likely
it going
outcome
through
is
Parliament.
everybody's going to be a little bit upset.
You do see it going through
Well,
Parliament.
look, I think it depends on what comes out in the next 48 hours, because although we've got the cabinet approval and that side's locked from a UK perspective, there's only draft text still, so it can be altered. And that was one of the points that several of the cabinet ministers were making to the Prime Minister, that it's still draft. While it's still draft, we can still do something. I think that the Prime Minister has likely taken those concerns on board.
Yes.
I imagine that if there are to be negotiations, which I am sure there will be in that leaders' meeting, those issues will be raised. Those issues will be put on the table, and there will be further discussion. And I think what we'll see at the end of the weekend is something which potentially is passable by the UK Parliament.
David McCredie, well, let's talk next week, hopefully. Thank you so much for joining us.
I look forward to it, Ticky.
After the break, a special chat with one of the health professionals to royalty, India's Dr Issac Mathai. With me, join me next.
Now, back to Ticky.
Yes, welcome back. Well, a big week for India in Australia this week, with the first ever visit by an Indian president who met with our Prime Minister. Coincidentally, another rather famous Indian has been in town, Dr Issac Mathai, who is the guru in alternative medicine in India, with his famous retreat Saukya in Bangalore, a favourite of the stars and royalty. Well, to understand how important this whole space is in India, there's actually a ministry of Ayush, which stands for, I'm going to get this right, Ayurveda, Yoga and Naturopathy, Unani, Siddha and Homeopathy. Well, Dr Issac Mathai joins me in the studio. Great to have you here, Dr Mathai. Why do you think this is, I mean, in the Western world, alternative medicine has gone from being a fashion to almost a normality? What's driven it?
Because of the Western medicine is great for so many medical conditions, but along with the Western medicine, the alternative medicine, or we won't call alternative medicine, we call it as a systems of medicine, which India, for example, Ayurveda goes back to 5,000 years, has an effective treatment for a lot of conditions, not only for disease condition, and also to keep you in a healthy state.
Yes, well, don't look at my eyes closely. I'm sure there's all sorts of things wrong with my kidneys and liver. But you were actually, the ministry for Ayush is it's extraordinary. There's actually a ministry for it in India. Yeah. And Prime Minister Modi actually would have liked you to run it, as I understand.
That's right. You know, because of the ministry need, we have 700,000 qualified other systems of medicine doctors in India, equal to the Western medical doctors. So Prime Minister Modi given a lot of importance for the Ayush, or the systems of medicine. So he wants that to expand in India, expand to the world. So there's a lot of activities going on. So he wants somebody even from a private sector to come and
But you're
and
too
lead
busy,
the place.
presumably, you're too busy.
To do.
What is Ayurveda?
It is Ayurveda is more than a medicine. It is a way of life. So Ayur means life, and Veda is knowledge. So it's a knowledge about the life. That's the real meaning of Ayurveda. So majority of the Ayurveda is teaching you how to live your life, how to eat, when to eat, what to eat, how to maintain your cleanliness, how to detoxify.
You've said that food is almost more important than whether you have too much alcohol or smoke.
That's right. Food is a medicine, medicine is a food. So what you eat and when to eat and how to eat, and all this matter to your health and your sleep, your day-to-day lifestyle, your emotions, your feelings, everything. Then when you get to sickness, you think about medical treatment or something.
And so some of the plants that you use for Ayurveda, they're root-driven. Now I know that's true of a lot of Chinese medicine as well. What's the difference between, because a lot of it's detoxing, isn't it?
Yes, if it is a lot of Chinese medicine and the Indian medicine, Ayurveda started from the same Himalayas, from the other side and this side. And there are more than 6,000 medicinal plants are identified and documented in Ayurveda. Out of that, about 600 species are used on a daily basis. In the Chinese medicine also, thousands of herbs are utilized as a medicinal properties for
and
curing.
You've worked in both?
I worked in both. I studied in China also in the Chinese pulse diagnosis and acupuncture. That gave me a wider expansion in my mind about what are the
and you
tools.
offer acupuncture at Saukya, your big retreat in Bangalore.
Yes.
Now, goodness me, who's I know you're one of the actually physicians for Prince Charles. Is that right?
That's right. Recently, he made me one of the holistic physicians.
He, of course, has been very progressive in this.
Yes.
Duchess of Cornwall goes down there as well. But you've also had Archbishop Tutu, actors and actresses, business leaders.
Yes, some of the biggest rich families or the biggest business families from
and they come
New
for a
York
week, or how long do they come?
Usually they come for about 10 days to 2 weeks. 10 days to 2 weeks is a good time to change your system and put in the right track. And there your mind, body, spirit, your physiological system, and also recent research find out that 3 weeks of treatment will even change the toxicity from your DNA out. And also 2 weeks of treatment will change your inflammatory markers and your immune system and detoxification. So it is not a magical thing, it's a real stuff.
Yes, and you have to work quite hard at it, I'm sure. Well, Dr Issac Mathai, it's great to have you for a moment here while you're in Sydney. Thank you very much for joining us.
Nice to meet you. Thank you.
Well, moving to the local market now, and the ASX 200 ending the week higher, rising 0.44% in today's trade. For the week, the bourse was down around 0.3 amid increased geopolitical tensions. Recapping the big corporate stories this week, I sat down with CMC Markets Chief Market Strategist Michael McCarthy a little earlier. Michael McCarthy, a busy corporate week, but today in particular we've got Brexit and Europe, in fact, putting the markets on edge.
Absolutely. Those two concerns really weighing in terms of how the Brexit will take place. It's pretty clear that you can't have your cake and eat it too, and that's been brought home to particularly those UK citizens who voted to leave. There's going to be a cost, and that is not going to be an easy passage. But there's further progress over the weekend with Theresa May going to Brussels tomorrow and the European Union voting on it on Sunday. So we might be over that one.
And then we've got the French, they're upset. We've got the Spanish, they're upset over Gibraltar.
And then the Italians who can't balance the books.
Well, Italy, presumably, on its own, is a problem for markets.
That's a big problem. The growth in Europe is disappointed this year. There were some pretty optimistic projections at the beginning of the year. We'd see 10% growth across the European economy. Instead, it's closer to 5%. But they're still projecting 10 for next year. If Italy keeps kicking the EU in the shins, those numbers might come down pretty quickly, and markets on the continent with them.
Surely Mario Draghi can do something, can't he?
I would have thought so. He's a miracle man.
All right, now let's go to actual companies. Of course, Coles, the spin-off, was the big story of the week, wasn't it?
Absolutely. And on a very tough day on Wednesday, when the market was under real pressure, Wesfarmers shareholders did well. Wesfarmers naturally traded down after they shed Coles. They were down $12.26, whereas on that same day, the new Coles closed at $12.75. So Wesfarmers shareholders actually picked up 50 cents per share on a day when most shareholders across the market were losing.
I see. And then that leaves the market now focused on where's Wesfarmers heading?
Oh, that's the big question. Now, because it's a spin-off, they haven't got a big cash chest to play with out of this divestment, but nonetheless, Wesfarmers, no doubt, casting an eye over their portfolio, and a lot of people wondering which way they'll move.
All right. AGM's coming up next week. First of all, Premier Solomon Lew, and then Myer on the Friday. And there's been a lot of activity and ding-dong between the two this week.
Oh, absolutely. Who would make an enemy of Mr. Lew? He has proved a dogged fighter in this one. What was it, the late 90s that he left Myer? And for 20 years, he's prosecuted this campaign, and it looks like it's all coming his way.
Does the market think that they're going to get this second strike?
A lot of talk. Some traders claiming it's almost certain. Some asking about whether or not there'll be a spill of the board at next Friday's meeting.
That's all for the show tonight, but really important. See you on Monday at the brand new time of 4:30 p.m. Eastern Daylight Time, and then again on catch up at 10:30 p.m. Thank you for your company.